Good afternoon, everybody. This is Praveen. I am quick introduction. I am the founder of JitFinco, and KYC is one of our product lines. And this product is designed to help MSMEs and MSME owners manage GST and GST related aspects better. So thank you very much for joining us for the webinar today. And today's webinar is about input tax credit and the importance of input tax credit and how you can claim input tax credit and what are the kind of hurdles people face when claiming input tax credit and how to solve them. So what we'll cover today is a quick introduction about JetFinco and then our products and services and how they are geared to help MSME owners. And then, we will leave it to a GST expert to kind of talk about input tax credit and how MSMEs can avail full input tax credit and also the importance of input tax credit with respect to GST. So quickly moving on about the company, founded in 2019. And our primary mission is to help MSME owners with everyday hurdles. So today, when we look at MSMEs and MSME owners, there are a lot of problems MSMEs face. And with the introduction of GST a few years back, I think that's a new compliance and a new law that companies had to adhere to. And there's still a lot of confusion about GST and GST related aspects. So we decided to kind of address that and help MSME owners. Today, KYSS is being used by 18,000 customers across 22 states. We act through KYSS, our 18,000 customers are tracking 24 lakh suppliers every month. So that basically means that GST has around 12 million customers, and of that we probably track 2 million. Approximately 20% of the entire GST base is tracked by KYSS and KYSS users. We're a Bangalore-based company. We're a Bangalore-based software company, and we have a physical presence only in Bangalore, but we work with customers across multiple states. Moving on. Our product offerings, what we do is we do working capital finance / lending as well for MSMEs. We help MSMEs with software for GST reconciliation. This reconciliation could be reconciliation between GSTR 1 and 3B, 2A and 3B. You could do multiple types of GST reconciliation using KYSS software. KYSS also helps you track supplier filings and analyze who are your best suppliers, who are your worst suppliers, which suppliers pay GST on time, which suppliers don't pay GST on time, and so on and so forth. So supplier tracking is a big part of KYSS software, and that is one of the hero features of the software. And like I mentioned just a few minutes back, we have 24 lakh suppliers being tracked on KYSS at the moment. And while KYSS is more of a software offering, a lot of MSME customers who we have come back and asked advisory services as well. So what we've done is we've recently launched something called GST108, GST108 Helpline, which basically is advisory services. Through which we are helping MSMEs with GST notices, GST registration, cancellation, revocation, filings, etc. This is more of a service which we are offering for our own customers. And last but not the least, what we also do is the KYSS also offers e-invoices and e-way bills. So if you're about 20 crores in terms of turnover, and if you want to generate e-way bills and e-invoices, you could always use KYSS to generate those e-way bills and e-invoices. So in a nutshell, what we want to do is we want to help MSME in every aspect, whichever we can. Our focus area is GST and working capital finance, and these are the two areas where we have covered in depth and in detail. And we do these webinars once in a month, primarily every third Tuesday. And the idea of the webinar is to kind of help the MSME owner understand the finer aspects of GST or GST related aspects. The last webinar we did was on notices. We felt that the GST department was releasing somewhere around 35 to 40,000 odd notices, and many MSMEs were getting notices. So we did a webinar on notices last Tuesday, and this time, we're doing a webinar on Credit. And next month, third Tuesday, we'll do a new webinar on a new topic. Our team will inform you on that webinar topic well in advance. And thank you so much for registering for this webinar. And what we will do is we'll basically go ahead and start the webinar in a moment. But where all we can help with working capital credit. We can help you identify non-compliant suppliers. We can help you with common GST queries. We can also help you with common GST issues such as filing notices and so on and so forth. So if any of these areas are problem areas for you, I'm sure most of you will have your own CA or your own trusted advisor, but you could also reach out to us. We have our WhatsApp numbers active. Most of you are part of those WhatsApp communications. Reach out to us and we'll be happy to help you. So this is where I stop, and I pass on the floor to a GST expert. His name is Arvind, and he will talk about the GST input tax credit. And then towards the end of the webinar, we could take a few questions on this particular topic. And I'll also be happy to answer any questions you may have at the end of the webinar. Arvind, over to you.
Thank you, Praveen, for that introduction. So today's topic, input tax credit, something that has been spoken about a lot in GST from the advent of GST. This input tax credit, in terms of a brief history, in terms of what this means, this input tax credit is not a new concept. It was called SENVAT before GST. But then once the GST has come in, it's been termed as an input tax credit. And we hear a lot about it, right? In the news, you're listening to a lot of issues with ITC. You hear about people, a lot of government tracking that is done on how much credit is being claimed in the market. So when we were listening to all this, and then when the topic of notices came up previously, even in the notices, there were a lot of issues that were related to input tax credit. So we only found it right to be talking about input tax credit in this time in GST, when a lot of you are going through reconciliations, you're all going through a lot of issues with the notices and all of this. Also, from on July 1st, that is a few days from now, GST completes 5 years. And in this 5 years, there has been a lot of changes that have been made, but more or less the law today has settled at a certain place. A good time for all the MSME owners to understand what this input tax credit means to them, and also how they can ensure that they get benefit of this input tax credit, and that whatever you're paying as GST does not go for a waste. So that's the brief objective. We will immediately get into the content. What I would request is that if any of you have questions, please drop it in the chat box and we will take it at the end of the session. And even at the end of the session, if you have not put it in the chat as well, we will allow a few questions to be answered. But you may have a few questions while the presentation is ongoing. So please do make a note of that and put it in the chat box, and we will answer all those questions at the end of the. So let's start with the very basic question. What is input tax credit? A lot of you already know this, but to just put it in very, very simple terms, whenever as a GST registered taxpayer, you are purchasing any goods or taking any services, you're paying a GST on that to the vendor, to your supplier, you're paying GST. That GST that is being paid can be reduced from the GST that you are supposed to pay to the government on sales. So whatever that you have paid on your purchases, you are allowed to adjust that against the GST that you pay on sales, and that is what is called input tax credit. The next question is, when can we claim it? The input tax credit can basically be claimed while the monthly returns or the quarterly returns are being filed, depending on the frequency that you have adopted. whenever the GST returns are being filed, especially the GSTR 3B is being filed, these input tax credit can be claimed. Now, the next question is, every tax that we pay on the purchases, every tax that we pay on services, is it eligible? It's a yes and no question. Most of it is eligible, but there are a few restrictions that have been put by the government in terms of which credit can be claimed and which credit cannot be claimed. And this a little more in detail we will cover as we move ahead in the presentation. Now, what is the eligibility for claiming input tax credit? The primary eligibility is you need to be a GST registered dealer, which or a taxpayer basically. So why do we say you have to be GST registered? Now, let's say as an end consumer, if you're going and purchasing a particular commodity in any MRP store, in a retail store, and you're paying GST on that, if you're not registered under GST, the GST that you pay while you purchase a commodity cannot be adjusted anyway. It's not input tax credit. It's a tax that you're paying on the purchase, but it's not input tax credit. But the same, if a retailer is going to a wholesaler and buying a few commodities, the retailer then sells this by charging GST. In that case, the retailer is a registered GST tax. Only that registered taxpayer can claim the benefit of input tax credit. So the first criteria is you have to be registered under GST. Second criteria, very critical, is that there needs to be a tax invoice, which means that the supplier should be issuing an invoice. There is no specific format, but there are a few items that need to be captured in the invoice that we will again cover later. When we look at the purchase register, we will cover what needs to be covered on a tax invoice. But the supplier needs to issue a tax invoice covering the relevant details, and that clearly should mention what is the taxable amount. Now, we were talking about the eligibility for claiming the input tax credit. We spoke about the first reason, that you need to be a GST registered taxpayer. Second is that a tax invoice or a debit note needs to be available. And supplier should basically be giving a document which mentions two important things: mentions the taxable amount and also mentions the GST amount that's being charged. These are two very critical aspects that need to be mentioned on the tax invoice that the supplier is issuing. We have a few other items to be captured, but we will cover that when we look at the purchase in a few. The third criteria is that the supplier should have filed the GSTR1 correctly and on time on the GST portal. So that is also another important requirement for claiming the input tax credit. Now, this is why we spoke about a lot in the introduction. Also, we spoke a lot about the supplier tracking being extremely important. The reason it's important is that unless the supplier has filed his GSTR1, the input tax credit cannot be claimed, even though you have satisfied all the other. The other aspects that need to be, these are the three primary eligibilities, but there are a few other things that we need to consider while claiming input tax credit. The next thing is that the input tax credit should not be falling under the definition of blocked credit. So the GST law, this was also available in previous laws prior to GST, but the GST law defines something called block credit. It defines a few services on which input tax cannot be claimed, even if you satisfy all the other conditions of the ITC claim. We spoke about three conditions in the last slide. Even if you satisfy all those conditions, but the services on which you're claiming the tax credit is in the definition of block credit, then that credit cannot be claimed. What is block credit? We will just see in the next slide. Now, also, if the goods and services are received in parts. Now, let's take the example of a retailer receiving some shipments to the wholesaler. And there's one shipment of 100 units that have been agreed. And this is being shipped by the wholesaler as 25 units in the first month, 25 in the second month, and 50 in the third month. And a single invoice is being raised for the entire shipment. The input tax credit can only be claimed in the third month. That is, if you're receiving anything in parts or installments and there's a single tax invoice for the same, it can only be claimed when the last installment has been completed. So this will depend on the contracting arrangement between the buyer and the seller of the goods. This can also happen in services where you're availing a few services from, let's say, a consultant who's giving services over a period of 3 months in different parts across, and you have different milestones. At the end of the third milestone, if they have agreed to do something in the first month, second month, and third month, after completion of the entire service in the third month, the input tax credit can be claimed. The next eligibility for input tax credit is that if you are claiming input tax credit on capital goods. Now, what are these capital goods? Any asset purchase that is happening. A business is buying laptops, a business is buying furniture, a business is buying, let's say, a vehicle. Vehicle also falls under block credit, but just to give an example of what a fixed asset is. If any of these GST is paid on any of these fixed assets, the input tax credit can only be claimed if the depreciation is not claimed on it. So if you are claiming depreciation on the GST component, let's say you have bought a laptop for 50,000 rupees and a GST of 9,000 rupees is levied on that. If the entire 59,000 rupees is capitalized and depreciation is claimed on that, the input tax credit cannot be claimed. If depreciation is not claimed and that 50,000 only has been capitalized, then the 9,000 can be claimed as input tax credit. Slightly technical, but just to repeat, if an asset is being purchased and GST is being paid on the asset value, the GST can only be claimed as input tax credit if the GST amount is not capitalized in the books and depreciation is claimed. If a depreciation is claimed, then the input tax credit cannot be claimed. That is the next eligibility for input tax credit. Another important eligibility is that if you have availed some services from a supplier, the payment to the supplier needs to be made in 180 days, which is 6 months. From the date of the invoice within 6 months, the taxpayer needs to pay the supplier the dues, including GST. Only if this is done can input tax credit be claimed. Now, let's say, for example, that input tax credit was claimed in month 1, but after 6 months also the payment was not made. Then in the 7th month, the GST law specifies that the taxpayer shall reverse the credit that has been claimed. That is basically you have to pay back the credit to the government along with interest if the payment is not made to supplier within 6 months. This is a very critical condition, and in fact also forms a part of the annual return filing, especially if you're under GST audit. This is something that needs to be certified by the department that has the payment been made within 180 days. Very, very critical. So please do make a note and please do ensure that supplier payments are made within 180 days. Let's move on to something that we spoke about in the last slide. What is this blocked credit? Now, like I mentioned, the GST law has specified a few items or a few services and a few goods on which credit cannot be claimed. This is very specific, applies across businesses with only a very, very few exceptions. Let's take the example as a service provider. Let's say today you're running an office and you're buying food items for your employees, or you have engaged somebody for catering, outdoor catering. You have basically set up an office, you have 50 employees, and for all of these employees, you have a catering service. Now, this business cannot claim the input tax credit on these catering services. So you're paying, let's say you're paying a lakh to the outdoor catering service, and you have paid 18,000 GST on that. That GST that is paid on the catering services cannot be claimed as input tax credit. It's called a blocked credit as per GST. The next item that falls under block credit is any form of beauty treatments, plastic or cosmetic surgeries. Now, this is again becomes very critical because the definition of whether a surgery is cosmetic or not also will involve some amount of thinking. We will not get into the nitty-gritties and to get into the specifics of this point, but basically any form of a beauty treatment, plastic or cosmetic surgeries, GST that is paid on these services will not be allowed as input tax credit. The next very important, in fact, very critical, may apply to almost all businesses, all MSME owners today. You may be buying vehicles. The business is buying vehicles. It could be vehicles for movement of employees. It could be vehicles for movement of goods. Now, any of the purchase of these motor vehicles or any cab services that are being taken by the company, the input tax credit on, so basically the GST that is paid on these services for renting or for purchase of a vehicle, that cannot be claimed by the business. Now, what is the exception? If you are running a cab service or if you are running the business of selling these motor vehicles, only then can you claim the input tax credit on these items. Otherwise, if you're running any business other than selling of vehicles or a cab service or a transportation service, you basically cannot avail any tax credit on the GST paid on either purchase of vehicles or on paid on cab services or renting services of these vehicles. The next block credit is membership that is paid to gyms or any club or fitness centers. These are not allowed as input tax credit under the law. The next item, again, very critical. A lot of MSME owners, you're buying health insurance for your employees, life insurance for employees. The GST that is paid on general insurance, it could be any insurance for fire, fidelity policies, stock cover, any of these insurance that are being paid, general insurance on either the factory or the building or on stock, health insurance for the employees or for self, life insurance for self or for employees. None of these services where there's a GST can be claimed as ITC, irrespective of the nature of business that is being carried out. Another critical block credit, in fact, this is a block credit that has been coming from the times of service tax. It was there even before GST. any benefits that are given to employees. It could be leave travel allowances. It could be any traveling perks. Let's say you have there has been an employee vacation and the company has paid for it. There has been hotel accommodation for the employees and the company has paid for it. The GST on any of these travel perks or benefits that the company is extending to the employees, GST on that also cannot be claimed. Another extremely critical item in the block credit is, as a factory, if you're doing any sort of civil work, constructing an immovable property, constructing factory, or constructing any sort of a structure, civil structure in the organization, in the factory, or in your office premises, that cannot be considered for the input tax credit. It can be even in service companies who are basically doing up their office, putting up partitions or making any sort of a civil work adjustment inside the office premises. The GST that is paid on these goods and services that are required for this civil, for construction of immovable property, that is not allowed as input tax credit. Now, the next question, we have spoken about what is input tax credit. We spoke about what is block credit, what is allowed, what is not allowed. Let's get back to the basic of what do I need to. Let's say you have satisfied all the conditions. We spoke about a few eligibility criteria. Let's say as an MSME owner, you have satisfied all of these eligibility criteria. After this, what do you need to do to claim the input tax credit? The first step is extracting the purchase register from the books. Now, we spoke about tax invoice. We spoke about what the tax invoice should basically have. It should have these items that we are showing on the screen. GST-IN of the supplier needs to mandatorily be mentioned on the tax invoice. The invoice number is very important. The date of the invoice also needs to be mentioned on the invoice. The taxable value of goods and services. Let's say the total amount is 1,18,000. 1 lakh is the taxable value, 18% or 18,000 is the tax charged. The taxable value of 1 lakh plus the tax charged of 18%. Now, this tax charge can be CGST, SGST, or IGST. That can be central, state, or integrated GST. That needs to be mentioned. The tax amount as well as the nature of this tax, whether it's CGST, SGST, or IGST, needs to be mentioned on the invoice. And the HSN code, it's called the Harmonized System of Nomenclature. It's a global system to track. HSN is basically a global system developed, a European system that is developed, which basically tries and categorizes each goods into a particular code. This is just for identification. The HSN was first adopted in India by the Customs Department. The GST department has also adopted the same nomenclature. SAC is Service Accounting Code, but today HSN and SAC are terms that are used interchangeably. Basically, any series in the GST that starts from 00 or 01 to 98 is called HSN. Any series that starts from 99 is called a Service Accounting Code. It's for identification of services. That is what HSN or SAC means. These items need to be put on the tax invoice of the supplier. And when it is put on the tax invoice of the supplier, we need to also record all of this on the purchase register. And once this is recorded in the purchase register, at the end of the month, when the purchase register is extracted, now this could be any books of account. It could be Tally, it could be QuickBooks, it could be Zoho. The basic principle still remains the same, that you capture all these details in your purchase register. And at the end of the month, all of this needs to be taken out in an Excel format or in any other format that can be worked upon. Excel is preferable because you can do a lot of calculations on the Excel. The purchase register with all these details need to be extracted on a monthly basis. This is the first step to claim input tax credit. Then we move on. Once the purchase register has been downloaded, the next item that needs to be done is the GSTR2B that needs to be downloaded from the GST portal. Now, I'll just spend a couple of minutes on what this GSTR2B is. Initially, when the GST law came into picture, there were only 3 returns, GSTR1, 2, and 3. GSTR1 is on sales. Whatever as a taxpayer you're making sales or you're providing services, the tax on that and these invoices need to be reported invoice-wise in the GSTR1. That still remains as is today. GSTR2 is the return of input. Whatever you're claiming on purchases or whatever you're basically paying on purchase of goods or taking of services, that was supposed to be filed in GSTR2. And that was the initial idea. And the GSTR3 was basically 1 minus 2. So you have sales, you have purchases, tax on sales minus tax on purchases is the net tax, and that was what had to be paid in the GSTR3. But eventually in the course of GST, GSTR2 and GSTR3 have never been activated. Rather, GSTR3B, a summary return came into picture where basically you reported the summary of GSTR1, put the input tax credit, and the net tax was being paid. That was GSTR3B. Now this input tax credit is basically coming out of a form called GSTR 2A initially and 2B. Now, what is GSTR 2A? What is GSTR 2B? We will compare a little later. But for the ITC recon, because we're talking about how to claim input tax credit, the next step that the taxpayer needs to do is to go and download the GSTR 2B for the relevant month from the portal. Now, the next question, if you're a quarterly filer, what can you do? The GSTR 2B is generated on a quarterly basis as well. You can go on the quarterly GSTR 2B and download it for reconciliation. But we suggest that irrespective of the frequency of filing, irrespective of whether you're a monthly or a quarterly filer, please download the purchase register and 2B on a month-on-month basis and do the reconciliation, because it gives you enough time to go back to your supplier and follow up if the credit is not appearing in the GSTR 2B. Once the purchase register and GSTR 2B is available, the next step is to identify what is ineligible in this. Now, the ineligibility is what we discussed in terms of blocked credit. We spoke about this, that there are some credits which cannot be claimed. That needs to be identified and removed from the purchase register. Once this step is done, the purchase, so after in the purchase register, when you remove all the ineligible credit, what remains is called the net input credit that is eligible. Now, that net credit needs to be compared with all the entries in the GSTR 2B. If you have 10 invoices in purchase register, only all the 10 invoices with the same details are appearing in the GSTR 2B, can the input tax credit be claimed. Now, if you have 10 entries in the purchase register and only 9 in the GSTR 2B, the credit can only be claimed for that 9 entries. So this comparison of purchase register with GSTR 2B is to ensure that all the suppliers have basically gone ahead and uploaded your invoices in their GSTR 1, which will allow the taxpayer to claim input tax credit. Once all these steps are done, you arrive at basically the available or eligible ITC to be claimed. That ITC, whatever remains, can be reduced from the GST liability on sales, and the net tax needs to be reported and paid through the monthly or the quarterly GSTR 3B. So this is the process overall that needs to be followed by any taxpayer in order to claim the GST input tax credit. Now, while we spoke about all of this, we have been stressing on one very important fact, that it's very important to know who the suppliers are. It's also very important to know what their filing frequency is. So right now, probably when a supplier is being onboarded, what is being checked is the ability of the supplier to service. That's all is typically checked by an MSME, whether that supplier is capable of supplying per my requirements. But it's also important to know regulatory from GST perspective, how good the supplier is. Why we stress upon it so much? Now, up to January 1st, 2022, the GST law said that if you have 100 rupees in your purchase register, but you only have 97 rupees in GSTR 3B, you can still go ahead and claim 100 rupees. That 5% increase up or minus, plus and minus on the GSTR 2B was allowed by the department. The department said, if you have an X amount in GSTR 3B that's appearing as credit, you can either claim 5% more than that or less than that in your GST returns. That was being allowed. This was basically to give some amount of flexibility to the taxpayer. In case one of the suppliers have not uploaded their GSTR, the invoices in the GSTR 1, the taxpayer is not at a loss and they can still go and claim the ITC. That rule in the 38th GST Council was changed. The department rolled back this benefit and said, only if every rupee appears in GSTR 2B can you claim the input tax credit. This makes it even more critical to know if your suppliers are filing their GST returns. What we suggest in terms of know your suppliers is, even before you onboard a supplier, even before you start working with a supplier, please do go to the GST portal. We will also show you where you can check the filing frequency. Please check the filing frequency of the supplier. And it is recommended to do business with suppliers who are prompt, because otherwise this could mean a big impact on your cash flow. If you are paying GST to the suppliers and the suppliers are not filing GST returns, that can mean that you will not get that input tax credit, which means you cannot reduce this credit from your output liability. This will have a large impact on the cash flow of MSMEs, because every rupee for an MSME matters. So please do ensure, know your suppliers before you onboard them. And even once they're onboarded, please on a month-on-month basis, please check the filing frequency of your suppliers. Now we spoke about checking your suppliers. How do we do it? If you log on to the GST portal, again, this is a feature that is publicly available. That means you don't need to have a login ID password to do this. Once you open the GST portal, at the top, there is a button called Search Taxpayer, where you can click on that. Search Taxpayer can be done two ways. It can either be using the GSTIN or the PAN. But if you're doing business with a supplier, it's very likely that there's a GSTIN already available. Please enter the GSTIN of the taxpayer in that tab and click on Search. how you will be able to see the screen. You'll be able to see the screen with the GST number, the legal name, the trade name, the effective date of registration, and where this particular person is located. This also can be very critical because then you know that if you're transacting with a certain person and they have given you a certain GST number, whether that GST actually belongs to them. This is another cross verification that can be done. Also provides the location where these people are located, where they are registered, how long have they been registered. All this detail will appear. And again, I repeat, this is a public information available. Anybody today can log into the GST portal without a login user ID password can do this verification. So it need not be only the business owner, your accountants, even if they probably don't have, or any of your staff, even if they don't have access to the GST login credentials, can still go ahead and do this check on the GST portal because this is publicly available. Now, once this has been validated, at the bottom of the screen, you will see something called a check filing table or a show file table. When you click on the show filing table, it will show the filing frequency of this particular supplier. So basically, it is a very good indicator because you not only see up to where they have filed, you can know whether they're up to date or not. You also know the date of filing. So you can actually see that are they filing it on time? Are they regularly filing the returns? Are they usually on time? Are they usually late? All these patterns and trends can be identified when the show file table is clicked on the GST portal. And this need not be done just for the suppliers that you're going to onboard. This can also be done on a monthly basis as a check. Maybe not for all suppliers, but for some of the suppliers, you can keep doing this repetitive check every month to just check whether all your suppliers are actually filing their GST on a timely basis. We spoke about two types of returns. We spoke about GSTR 2A and GSTR 2B, and like we discussed, we are coming back to what these two sources of input tax credit mean. And there's a reason why we're talking about it. When we talk about how you can maximize your input tax credit, how can you ensure that you claim every eligible credit that comes to you? It is very critical before we answer that question to understand what GSTR 2A and GSTR 2B is. Like I gave a certain history to the GST return in 1, 2, and 3, the two never got activated. Instead, the department started with something called GSTR 2A. GSTR 2A, like GSTR 2B also, is auto-populated. There's nothing that a taxpayer does. Basis your supplier filings, this gets auto-populated by the GST portal itself. And GSTR 2A came first and 2B came later. Now, what is 2A? 2A is a dynamic return, whereas 2B is static. Now, why do we say dynamic? Why do we say static? Let's look at an example. Let's say Mr. A is the taxpayer. He took some services or bought some goods from Mr. B in the month of April. Now, Mr. B did not file his GSTR 1 on time. He went, instead of filing, the April return was supposed to be filed by 20th of May, but this particular Mr. B went and filed it in July. The GSTR 2A does not consider date of filing. It considers the date of invoice. So because the date of invoice is April, whenever this Mr. B files his GST credit, this in ITC will go sit in the GSTR 2A of the month of April. That is why it's dynamic. As and when your suppliers are filing these returns, this will keep getting generated. That is why it is dynamic. GSTR 2B, on the other hand, calculates, now let's say in the month of April, up to the 13th of May, how many ever of your suppliers have filed the GSTR 1, it will cut off on that date and prepare the ITC statement as on that date. So whoever are the suppliers who have filed their GSTR 1 of April up to the 13th of May, only their credits will be considered in your GSTR 2B. That is why it is static. Once generated on the date of 13th, it will not change permanently. So in our previous example, Mr. B went ahead and filed the GST in the month of July. So while it will appear in the GSTR 2A of April, it will appear in the GSTR 2B of July only. Because for GSTR 2B, the date of invoice is not relevant. Date of filing is relevant. So that is why we talk about the dynamic versus static. Both GSTR 2A, now this is the differences. What is the commonality? Source is the same. The data source is the GSTR 1 of the supplier or the supplier. We have spoken about different types of GST returns when we spoke about notices, but GSTR 5 is to be filed by a certain category of taxpayers or non-resident. GSTR 6 and GSTR 7 and 8, these are different forms to be filed by different kinds of suppliers. Now, whatever the supplier does in terms of filing, that is the data source for both 2A and 2B. So the data source is the same, frequency is the same. The only difference is how is the GSTR 2A going to capture data? How is the GSTR 2B going to capture the data? So this is very critical for our understanding of how we can maximize the input tax credit claim. This is why we are all here today, to understand how can I ensure that 100% of my ITC I'm claiming 100% of my ITC. How do I ensure this? So what are the steps that we need to follow? So we spoke about what we need to do on a monthly basis. You generate a purchase register, you generate the GSTR2B, and the reconciliation needs to be done. Now, there is a very common question that we do face with regard to MSME owners. What happens now? Let's say for the month of April, I have something in my purchase register is not in the GSTR2B. What do I do? It's not appearing. Have I lost the credit? Not necessarily. For a financial year, GST department says that your ITC can be claimed up to 30th November of succeeding year. That means for financial year 21-22, April 1st, 2021 to 31st March 2022, whatever credits have been missed out, you can claim it up to 30th November 2022. There's enough time. So what we suggest for all taxpayers to do, or all MSME owners to do, generate your purchase register and 2B on a month-on-month basis and reconcile them. You may see a few invoices appearing in your purchase register, not appearing in a GSTR2B. Make a list of those suppliers and those invoices. Immediately follow up with those suppliers. They may have their reasons for non-filing, but you have to follow up with those suppliers and inform them that the invoice that they have raised and the invoice is not appearing in the GSTR2B. That needs to be done. Once this follow-up is done, the supplier is then alerted that probably could be by mistake that the invoice was missed. The supplier can go ahead and file this in their GSTR. In their GSTR1, they can file this. Now, what happens once they have filed it? The GSTR2B, like we said, is static. That has already been generated. The credits have already been freezed there. You can always go back to the GSTR2A for the month and check whether the supplier has filed this invoice or not. After follow-up, has he filed? That can be verified using the GSTR2A because that is dynamic. As and when the supplier files, this will go and sit in the invoice month. So with your purchase register and the GSTR2A, this reconciliation can be done. So once this reconciliation is done and you are satisfied, the supplier after follow-up has filed the input tax credit and it's appearing in the GSTR2A, in that particular month, you can go ahead and claim the input tax credit. Like we said, there is enough time that is given by the department from the end of the financial year up to 30th November, they are giving the time. So after following up with all the suppliers, whenever they are filing their GST returns, after they have filed, after it's been confirmed with the GSTR2A, you can go ahead and claim the input tax credit in your GSTR3B. That is why both 2A and 2B are extremely critical returns. The 2B needs to be used for monthly reconciliations. And once you have identified the suppliers who have not filed in that particular month, please follow up with them. And after they file, to confirm whether they have filed or not, you always have the GSTR2A where you can go and check whether they have filed or not. And once you're satisfied and you have reconciled that they have already filed the input tax credit and everything is appearing in your GSTR2A, you can go ahead and claim the input tax credit. By doing this, all MSME owners can ensure that every rupee of eligible input tax credit that they have has been claimed and there is no loss or there's no stress on cash flow of the MSME. Now, we spoke about a lot of this process and a lot of this can be done manually, but it may not be very feasible. As and when the volume of business grows, now you may be able to do a manual reconciliation for 10, 15, 20 invoices, but as and when business grows, the resource requirement as well, you need to have an in-house accounts team who will be required to reconcile every invoice. This is going to be very, very time consuming. And not only that, it's going to be prone to a lot of error. It's not at all suggested to do a manual reconciliation because always the team can miss out. They can be a lot of manual errors because this is all being done when in a large volume. All these steps that we spoke about is quite extensive, and there is a lot of there's a lot of possibility that there's some manual error in the process. So what we suggest is please use automated tools. That is where KYSS is coming in. There's an automatic tool. The tool will all you have to do is just give the purchase register or upload the purchase register on the KYSS portal. The portal will then generate the 2B basis after getting the consent from the taxpayer and OTP consent from the taxpayer. It will go and generate the GSTR2B, do the reconciliation, and the suppliers who have not filed are identified and provided to you, which means then the follow-up can be very easily done. The automated tool will also reduce time and will also help in giving 100% accuracy on the data, which will help proper amount of follow-up that can happen, also saves a lot of time in the process. So this is why we talk about why automated reconciliation versus a manual reconciliation. And we definitely do suggest that all the taxpayers, please go for an automated tool. It will save a lot of time. And it will also help in ensuring that the supplier follow-up is done flawlessly throughout throughout the year. So this is what we have now. Are there any other questions? Please do send us the questions on the WhatsApp number. Our helpline will be able to help you on that.
Thank you so much, Arvind. This is Praveen once again. Just to add to what Arvind said, we also have a customer success team that helps you do your GST reconciliation pretty much on a monthly basis and help you take advantage of full input tax credit. Today, through WhatsApp, we communicate every day with most of our customers, and we make them an offer if they want to do GST reconciliation. We help them. So please take advantage of that. And if you would like to know more about our GST 108 services or KYC as a tool, we can do a separate demo as well. Thank you so much. And we'll also be sharing the deck with you all over WhatsApp. Thank you.
Thank you.